Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What's up, everybody? It's Tuesday, December the 10th. Welcome to today's edition of the Daily Market Commentary. As the S&P is down about 10 points this morning, NASDAQ down about 33. We're seeing a little bit of a pullback in our markets heading into a little bit of a Fed week. So hope you guys are having a great day. Had a great trading day yesterday. If you're new to the channel, do me a favor, hit that subscribe button, the notification bell. If you are a returning visitor, please make sure that you like the page. It means a lot for the YouTube algorithms. Let's get right to it. So S&P yesterday, we had talked about a potential breakdown below this blue line area, and we got a little bit of basing, and then our breakdown occurred. So it was a decent little move off of the breakdown, and it has come back down to our area of demand. Our area of demand here with this bit of basing that we had in place here. Now we've come back into that level. We got a very long wick out of that zone, so let's see what movement we get from there. Looking at that, I do have to wrap my lines now around this little area up here for a potential reversal area, because this is a speed candle, which we anticipate getting retraced. So if price rallies back up to this 31.36 area, I'd be interested to see if we get a reversal off of that and price comes back down. Looking at the NASDAQ, very similar price action today. We didn't have the demand area outlined in the NASDAQ that we did in the S&P, and so we actually traded a little bit below there, a little bit deeper in the NASDAQ as it was a bit weaker. Long reversal candlestick here that I think we could see price give us a little bit of a pop up into this region where we could see that reversal. If I look at this on a 4-hour time period, I'm seeing that lower swing high and lower swing low now to make it easier for me to consider getting in on one of those shorts. So look at both of those for today. If I'm looking at crude oil, we still have our potential breakout area here. We came close to it in the overnights. Remembering why this wasn't a false breakout, a number of you answered that properly yesterday in the comment section. This was not a false breakout because it didn't follow the rules for a breakout. There was no basing before the level. So I still need basing before the level above this 59.50. My gut tells me that we're still going to pop up above there here shortly. Now, as far as reversals, I don't really have anything else to add. None of these levels down here are going to be great for reversals based on the prior price action. And then moving over to crude oil, to gold. So gold, we talked yesterday about this big move down, and will we get a potential for a candle-to-candle trade on the short side to come down out of here? Well, that was what my thought was until we got hit to the 23.6 retracement, sold off, and then we created almost a perfect double bottom. So looking at this double bottom pattern we have here, a measured move on a double bottom would be trading up to here. On a measured move for the double bottom would be trading right up to this region, which, if you notice, this area here is the former area of support, which was also an area of resistance over here in the back. Now, a lot of people say, well, I thought we weren't supposed to cut through candles. When looking at strictly unfilled orders, yes, cutting through candles is definitely one of the things that you're taught not to do. What I would say is when we look at fair price value areas, which are a bit different than just what a lot of people would consider just pure supply and demand. I'm looking for fair price value areas. I'm okay looking through and cutting through those candles, primarily because I'm not looking at just where orders existed in the past and have been wiped out. I'm looking at where do I think algorithms may have some orders placed. So I'm going to look in here for a potential candle-to-candle trade at this point. Right at this area where we get a candle-to-candle opportunity in here, and that's where I will keep kind of an eye out later today to see, do we get some sort of a reversal? Now, I can't just get short when we get up here because I don't have an established supply area. I still need an established supply area to do it, but that's where candle-to-candle trading becomes valuable. Now, I had the Fibonacci extension up there earlier, so I'm going to pull that back up. And my initial thought was that we would get to the 38.2, or excuse me, the between that 38.2 and 50% retracement, and I would look for a candle-to-candle retracement there. Well, now as we see what price is doing, I think you're better off. I think that is going to line up right here at about the 61.8. So it does. It's a little higher than my first and initial projection, but that's because of the way that we created that double bottom. So just something to consider today as we rally up into that area. Next would be our bonds and currency markets. So in our bond markets, we are a little bit higher than we were the other day. We had talked about this as a potential reversal point, and price has not quite gotten back to that level yet, so nothing to add there. In the Aussie, we finally broke out of this little triangle pattern that we were chopping around in for a number of days, and we've begun the breakout to the downside, which the thought is that we'll continue to sell off until about this area here. And even that's a little bit of a suspect demand area. So if you're so inclined, and you may get some more basing for another shot below that area right there for price to continue to move down. In the euro, we're not anywhere near our euro levels as of yet. We had talked about getting below this line, although we weren't able to do so. And so on our euro levels, we're still fairly wide. We did have a pretty big sell-off on the euro level on Friday, but have not come back to the origin of that move yet. And then this upper wick kind of wipes out this as a supply area. So now I just got to wait for a better probability. Canadian dollar, we rallied up off of the low where I said that we could still break down below here, but haven't really done a whole lot. So keep an eye on two breakout potentials above here or below here, and both of them I think could work out pretty well as long as I get the basing in front of the level on both. Great British Pound and Japanese Yen. Great British Pound has a level below current price, but we didn't return back to it as of yet. It's this area right here. We are slowing momentum on the way up, however. No question is our momentum slowing as we're rallying higher after, move up, little rest, strong move up, little rest, weaker move up, pull back, slower move up. So I think that we're due for a rollover here. And a rollover would probably break us through here, and this would still be our better reversal. So I think we're due for a rollover. Doesn't mean it's going to happen. And on a daily chart, we're kind of sitting right near that area of supply. Japanese yen. In our Japanese yen trade, we had looked at this as a potential for a confirmation, and then price blew right through that area. And so now for the yen, when I look at the 4-hour chart, I'm very much in a sideways price action. I can't do anything until I get outside of the borders of this long expanded range candle here, these big wicks. So nothing to add of any semblance. So keep an eye on some of these levels for today. I think that we're getting a little bit of a rally off the market, but then I think it could reverse and come back down. But always keep an eye on the news cycles as we may see some price movements happen with news cycles. So if you have any questions, please shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya.